All right, this is your market recap for May 8th, 2025. Today we played bullish, taking out I think this is last week's high. Yeah, Friday's high. Um, Kind of took a while to get going bullish, but once we did, we went and we went fast. So if we go down to the hourly, we can kind of see why. Um, so I was bullish today. I was long from this fair value gap, so obviously I lost, but my bias was right. So that tells me it's not a system problem. It's just a timing problem. Um, Now, if I had unlimited money just to sit here, I would have gone long 100 more times and I would have won. But I don't have infinite money. So took my one loss and I got out of the markets. So um, the reason I figured out maybe why, well, you can't really see it on this time frame, but I'll talk about it later. There's some run through here which like some expansion, which you need to look for to tell you that price is not going to retrace to here, but lower. Um, and in my opinion, this feels a little too low, this fair value gap, but it reacted off of it. I don't really know what else to say. It hit. But after that, we rocketed all the way up here in an hour, took out these highs. These were the daily highs and the daily targets that I marked out for my first trade, right? So that's good because it's clear that once we hit here, that was our target, and we kind of just went horizontal from there. So now in the 15-minute, we can more so see why we retraced to this lower fair value gap. Now, to have that, we need to realize what these lows are, right? These lows are FOMC lows. So these are data lows, meaning most of the time data wicks like CPI, PPI, all those really big, um, like shocking news events, I'll say, um, they don't really count in accordance with the algorithm. So if we count the run being from there to here, right, from this low at 3, because that's um, I'll call it a real low, not an artificial low like FOMC is. If we take it from this low and expand it all the way up to the high, equilibrium is right on the top of this fair value gap. Now that's perfect. 1375 and 1325. I mean, that's, can't get closer than that if you tried. So um, that's why I believe this was the target. Now, there have been times where we don't retrace all the way. I have an example here, right? This fair value gap here. Why did we want this one? Well, that's simple because there is no fair value gap down here. So if we go from here to the high, equilibrium's all the way down here. There's no inefficiency. Plus, we have to keep in mind day of the week. We haven't expanded yet in this week. All right, Monday, Tuesday, Wednesday dug down and expanded. Thursday's not going to have a huge deep retrace. We're going to retrace to here. But why I bring that up is because here we are. This is the week, right? We went down, 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 taking out these lows. And then we're going up. We took out these highs. This is not an expansion, right? An expansion is something like this, where it's above these highs. Um, so if for instance, we'll say this was the start of New York session, I wouldn't expect price to come all the way down to equilibrium. I would expect it to stay in the higher end if there was no inefficiency at equilibrium. But in this case, there is efficiency here and inefficiency here. And of course, if we ignore the data lows, boom, equilibrium's there. So that could be wrong, but that's why I think we chose this fair value gap instead of this one to react off of. As you can see, once we did, boom, off to the races. 1, 2, 3. All my profits would have been hit if I entered at the right time, but I didn't, and I'm okay with that because it's can't win them all, and it's another learning point. So that's good. believe that's all for the 15-minute. Let's go down to the 5-minute. We started the morning playing bearish, targeting these lows, or sorry, these arrays down here off of this 5-minute inverse. So we have this 5-minute bullish fair value gap here, validate it, nice closure there, get a good rejection wick here, close below it, come up, nicely round around it, and then boom, off to the races. Kind of choppy price action down here. I personally got tripped in this bullish leg here. I saw us hit this fair value gap here, which was the first one I drew out. Change in the state of delivery, whatnot. I believe might have been an SMT at that point as well, with some lows. I'm not entirely sure on that, but at first I thought I should have waited for it to take out this low, and then I would have been in. But if I waited for that, I would have been in this one, and I still would have lost. So it wasn't a fair value gap thing. It wasn't a timing within this fair value gap. It was the wrong fair value gap. If that makes sense. So, but if you chose the right one, boom, I mean, you're golden, right? So other than this 5-minute, it was cut and dry day. We kind of dragged down slowly to here, react here nicely off concentric encroachment, shoot all the way up, take our daily target, and go horizontal. That's how I see it. So not much more to go off of. Really clean day, actually. No SMTs that I saw at the focal points, the highs and lows. So what I got tripped in on was this. Usually I wait for an SMT of lows, but I was pretty certain we were going to play bullish. So I saw this reaction off this 1 hour. I liked it, right? There's this fair value gap right here. Good reaction bearish, so that validated it in my mind. And then we came up here, closed out of it, and I entered off of the change in the state of delivery to the upside in this fair value gap. And obviously, actually, this one up here, I saw it expand fast, so I moved my entry up here. Zoom in a little bit. Move my entry up here at this line. Stop was down here. Obviously, got stopped out. But I was targeting these, or this high, and this high. And it's nice to know they all would have gotten hit, but just wrong time, and most importantly, wrong array. So this is another one I was looking at. Like I mentioned before, maybe I should have waited for this low to get taken out over here. That wouldn't have mattered because we did the same thing, inverse fair value gap, validated it, boom, came down, used it, expanded, and came on to take it out. So once we have the right zone, we're good. The only thing that I could see being a problem is us expanding too fast to be able to get in. But I'm sure on the 15-second, there's no problem if considering the high time frame, array and whatnot. During the macro as well, I mean, it's pretty golden. Yeah, I mean, it's targeting highs. It's kind of like a calm here before the storm. It's so fast, and then once it hits it, boom, we're good. So yeah, going into the future, tomorrow is Friday. Look in the weekly time frame. We're already retraced 20 to 30% of the weekly range. Yeah, so looking for another expansive day. Look on the hourly, just took out this high, coming down. Close within this, if we play bullish out of this, I'd be looking for a tiny retrace and then a bullish expansion tomorrow. But I cannot trade tomorrow because I have my finals, unfortunately. But I will still be looking at it. Yeah, I mean, main problem today was picking the right fair value gap, and now we know to ignore data lows. I completely forgot about these lows being data. So if we scroll our page to here and we see this, my eyes do gravitate to this one. This one's too high. But if we see the whole thing, this is too low, right? So kind of threw me off there. But So yeah, we'll see what tomorrow really does before making any strong choices. But this has been your market recap for May 8th, 2025.